Welcome to this week's Monday Rate Update. On Friday, we got a jobs report that really helped the market out, and it brought interest rates down as they had gone up throughout most of the week. And the jobs report was a huge surprise. But you know what? That trend down in rates could be short-lived, because this week, Wednesday, we have CPI, the Consumer Price Index, and Thursday, PPI, the Producer Price Index, inflation reports. Both of those inflation reports that are going to come out. So we're going to talk a little bit about that. We're going to talk a little bit about the jobs report and what that means. And then we're going to see where rates are at as we start this week. All right, as we start Monday, we're looking at conventional rates right around 6.7%, VA right around 6.5. This is across the country, people. This is not the broker rates. My rates actually are lower than that, but this is the average across the country. And I keep it this way solely so that you can see kind of what the standard is across the country. And then you can compare that what I'm going to give you, and you're going to be much happier working with us. Now, the 10-year Treasury is back below 4.7%. That's good. And the 10-year Treasury and the 30-year fixed rate mortgage, they kind of move in tandem. When 10-year goes down, typically mortgage rates follow. This week, we'll see, but they're still holding near recent highs. We really need to get that 10-year back below 4.5%. If you are looking at buying, you know what? Reach out to me. I can give you a quote on actual rates. And remember, their rates are controlled by many different things. The rate you get is controlled by many different things. First, it's the lender you use. Two, it's your credit score. If you're not VA, it is also dependent on the type of home, the debt to income, and the down payment, the amount of your down payment. Again, higher rates go to riskier buyers. So if you have a higher down payment, well, you're a lot less risky to default on that loan, so you're going to get a much better rate. VA, hey, you know what? About 100% of what you get on a rate is determined by your credit score.
Okay, before we move on, I gotta say this. 91% of people watching this video now aren't subscribed to the channel. And look, if you're a Hawaii buyer, a veteran using your VA loan, or you're just trying to time the market right, this is exactly the kind of update you don't want to miss. So hit subscribe now, turn on notifications if you can, and let's get to the next report.
This past Friday was the big move of the week when we got a jobs report that was actually conflicting. First, we got non-farm payrolls. They actually, normally you see an increase, and I think the expectation was around 80,000 increase in jobs. It was a 23,000 loss. That's right, 23,000 jobs lost. And the previous 2 months, they were adjusted down. Those new job numbers were adjusted down by about 100,000. So really not a great jobs report. It's great in a sense for mortgage rates, but not great for the economy. Now, I will tell you this, though. There are two parts to the BLS jobs report. You got the non-farm payroll, and then you got the household survey. And in the household survey, unemployment actually ticked down from 4.2 to 4.1%. So that's not good news for interest rates, because it just shows in that survey that the job market is strong. So you got two conflicting sides. But the good thing is most people focused on the non-farm payroll drop, and that really helped interest rates come down and recover some from what we saw over the course of the week as rates went up due to the oil geopolitical crises in the Middle East. So again, what this does, remember the Fed, they're meeting in August, but they're not making a decision to raise or lower the Fed funds rate. But they are going to meet in September. Although President Trump wants them to lower the Fed funds rate, Fed Chair Warsh, he was pretty committed after this last meeting to raising the Fed funds rate. Again, you had 9-3 to hold, but those three, that was a big dissent. You normally get 0 or maybe one person dissenting. We had 3. But with the lower unemployment, actually the lower non-farm payrolls, that kind of puts a little bit of a, hey, let's wait and see aspect of Fed Chair Warsh, and actually the odds of a September hike before and after the jobs report coming out dropped from 58% down to 42%. So why are interest rates still high? Well, let's get into that. Now, before we get too excited about the jobs report and interest rates coming down, just know that the market is really being moved by oil and the Strait of Hormuz. And with the fighting that has erupted, continued to flare up in the region, and just really the lack of cooperation from Iran with the United States and Israel, they're being an absolute PIA. So this constant tension is keeping rates elevated. Oil prices had dropped into the 50s. Now they're back up over 70, into the 80s even. And this week, that is going to basically, we're going to see that pass through of the high oil, high energy prices into the two reports that we're going to see, the CPI and the PPI. And again, Fed Chair Warsh is, he's looking at labor and he's looking at inflation all the time. Right now, he's more focused on inflation. That's what's hurting people. It's not the labor market. The jobs are out there. It is the inflation piece. And if we get a hot CPI report and a hot PPI report, those odds of a hike in September, they go up. They go up a lot. Now let's take a look at this CPI print that's coming out. And in June, actually the CPI dipped by 0.4%, but that reading actually predated the Iran ceasefire collapse and the oil price spike that followed. So that was when oil prices were down. This one is going to show, because July was a tough month for oil prices overall, and we're going to see what the impact of that was. And again, and I've said it, I sound like a broken record, the Fed is already, they are kind of chomping at the bit. They want to raise the Fed funds rate. They don't want inflation to get out of control. And that's really the only way they control inflation, is by raising the Fed funds rate. And if we get hot numbers on the CPI, man, it's not good. It's not looking good for September. And that rate drop that we saw at the end of the week, past an opening, baby. It ain't going to matter anymore. So really, Wednesday, CPI Consumer Price Index, will kind of spell that out for you. That is the cost of goods for the consumer, for me and you. Thursday is the July PPI Producer Price Index. And that is the cost for the wholesale, the cost for the person who's providing the goods and services. And again, June's reading there fell sharply after a rise in May. So what are we going to see as we get into that report? And then Friday we have a retail sales. So that is consumer demand. What's the retail? What are you and I doing with spending money? Where are we spending our money? Have we kind of held back? What is our rate of savings? That comes out on Friday. So Wednesday, Thursday, Friday this week, boom, man, it's going to be 1, 2, 3. You know what? Hopefully the economy can kind of shuck and get out of the way of these hits, and maybe they fall short. But we'll see. Hope it's not a course of action. So let's take a look, another closer look at the calendar. Monday, Tuesday, not a lot of economic news. In the absence of economic news, you get a lot of speculation, which doesn't typically help interest rates. And then we focus more on the Middle East, which hasn't helped rates at all to date. So Monday, Tuesday, I don't expect any good movement with rates. Wednesday, Thursday, Friday, that's where we're going to get the real movement in the market, and we will see what those readings are. So bottom line for this week, man, it's we are coming into the week, good news, rates moving in the right direction, but on Wednesday, that all could change. That all could change depending on what the inflation report comes in at. And if you're in contract now, you just got into contract, the safe bet is always to lock. When you're working with someone like me or like the broker, we got some options. If rates all of a sudden drop even more, we can float you down, or we can move you to a different lender. But if you are floating and rates go up, you're toast. You're going to have to take that higher rate. So I'm that guy who goes to Vegas, and I don't gamble. I don't gamble with my money. I don't like gambling with yours. That's just the way I've always been with my clients, certainly with myself. And again, when in doubt, just lock it in. But if you wait, that is a gamble, and some people like that. I've had a few clients that do, but most clients are like, Larry, let's just lock. Let's just be safe. You know why? Because when you're floating, you're stressed. All right, there's enough stress as it is when you're buying a home. You don't need that extra stress of, well, should I lock today? Our rate's going to go up. Those are things you don't control anyway. What you do control is your decision to lock and be safe. You guys have a great weekend. Be safe yourselves. Have some fun. I'll talk to you later. Aloha.